Ladies and gentlemen, good day and welcome to the IRFC Q2FY25 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanket Chheda from DAM Capital Advisors Limited. Thank you and over to you, sir.
Yeah, thanks, Vidhi. Hello and very good morning to all of you. We are here to discuss the IRFC Q2 results. We have the entire management team. The key personnel will be Mr. Manoj Kumar Dubey, who is the chairman and MD. He would be doing this call for the first time after joining IRFC. And quite a dynamic personality, comes from very rich experience across many industries. The second is Shelly Verma, who is the Director of Finance, and Mr. Sunil Kumar Goyal, who is the GM Finance and CFO. So without further ado, I'll hand the call over to the MD, sir, Mr. Manoj Kumar Dubey. We'll follow that up by question and answers after his opening remarks. So over to you, sir.
So thank you, Sanket, for all good words. Good morning, friends. Welcome to conference call for Q2 results of FY25 for IRFC. I'm Manoj Dubey. I'm Chairman and Managing Director of this company, and with me, my Director of Finance, Ms. Shelly Verma, and my CFO, Mr. Sunil Goyal, and also my Head of Department. Before we discuss the H1 and Q2 results of the current FY, let me have the opportunity to introduce myself in brief. I took over as CMD IRFC on 10th of October last month. I bring in more than 30 years of experience of working in railway infra, logistics, and railway finance ecosystem. I'm an IRS officer of 1994 batch from civil services, and I worked with UTI also before joining railways. In the last decade, from 2013 to 2018, I headed the Railway Board's Infra Finance Wing of PPP and Extra Budgetary Resource Mobilization. So in a way, you can say that for me now, I've changed the sides of the table. For the earlier days, I was looking at IRFC for getting the money for railways, and now from here, I'll be doing the job from the other side. Meanwhile, from 2018 to 2024, I was also on the board of Container Corporation India Limited, that is popularly called concall, a leading Navratna railway logistic company as DF and CFO. Ministry of Railways and GOI as main promoters of IRFC have brought me here as CMD for a tenure of 5 years. Coming to a brief about the latest journey of IRFC, as you know, this company is working from 1986, mopping up funds for Indian Railways particularly. But the journey from 2015 onwards took a new turn. In 2015, for the first time, apart from funding the rolling stock requirements, that is engines and wagons and coaches for Indian Railways, Indian Railways also started taking funds from IRFC for their project financing. I was, in fact, in those days in the Railway Board itself. That journey culminated in a very steep rise in the asset of this company. In fact, from 2018 to 2023, average 60,000 crore plus disbursement took place. And in fact, with two highlights. One, in the FY 2021, the disbursement by IRFC to Indian Railways crossed more than 1 lakh crore. And until that year, that was the highest for any NBFC to disburse in 1 year. Second, in the FY 2023, the total AUM size of IRFC grew more than 5 trillion INR. In our terms, 5 lakh crore INR. In that particular year, it was highest in the CPSC NBFC system. With this steep rise in the business, one more milestone took place in the company. In 2021, listing of this company was done, and nearly 13% shares were divested. You all know that since then, the market cap of this company has grown steep, posing a lot of confidence in the kind of business that we do. Company also has a rare distinction of maintaining zero NPA all through. and has grown stronger in the balance sheet in last 5-6 years. With very high and steep growth in its assets under management for 5 consecutive FYs, there was no disbursement in last FY and current FY till now. In fact, our debt-equity ratio, because of the steep rise in the last FY, has gone very high, nearly 9 plus, which is now cooling down to nearly 7.5. This period of 6 quarters, in fact, when we did not disburse, but our projects which we had financed with 5-year moratorium time was still giving us a good revenue stream, and that is keeping our top and bottom line steady and healthy. With the full regular functional board in place now, I've taken over for next 5 years, and we have now my full team with me. Company is making concrete plans and roadmaps for renewed lending structure, not limiting itself to railways directly, but also to the backward and forward linkages in railways and logistic ecosystem, which covers almost everything in infrastructure. If we talk about port also, if we talk about anything which is doing something with the logistics will come out in our purview of memorandum of article. Meanwhile, going further, the company will keep augmenting its core competence and be ready to leverage our balance sheet strength to make very attractive funding available to all sectors as per our mandate and MOA. You may be aware that IRFC's weighted average cost of capital has always been lowest among the peers, and we intend to further bring it down, leveraging our strong balance sheet, having more share of 54 EC, and a zero NPA and zero tax status. Coming to our Q2 results and numbers, as you have already seen, it has been as steady as it could be, and I assure you that coming couple of quarters will be giving a lot of pace to growth and growth trajectory of the company. With infra story of the country for next 20 years, I would say, is completely intact, and the story of infrastructure in railway in particular fully intact. I see a very bright future of IRFC. With this welcome remarks, I welcome you all to this Q&A session with us. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Sanket Chheda from DAM Capital Advisors Limited. Please go ahead. Mr. Sanket, your line is unmuted.
Yeah, hi sir.
Yeah.
So my question was that in last 2 years we have seen developments in other PSU NBFCs as well. So PSC REC like earlier used to do only power. Later they have been mandated to do infra, which is non-power as well. As we see renowned capex after many years, and the signs of private capex picking up is already visible. So in case of IRFC, so far we have been only into railways, railway related financing. Any thoughts on, say, moving to different sectors or getting those mandates, and any change of strategy there, or any inclusion of other sectors as a part of strategy? So anything that you can highlight would be useful.
So yes, Sanket, this is the most pertinent question for us. So number one, as you rightly said, that the PFC and REC from their core sector of power, they are now into everything as infra finance company. So likewise, we also have the mandate from RBI to lend to anybody. There is no restriction from that side. Having said that, till now we have been funding only to the railways for two reasons. One, as you see that my asset under management size is as big as REC and PFC with the appetite that railways had with us. So obviously till now we never looked forward to anything else rather than meeting the targets of the railways, which used to be very high. In fact, I mentioned that in the last 5 FYs before FY23, the average disbursement was 60,000 crores, which was more than in fact to PFC REC also. Yes, going forward now, first thing that we have already started looking towards the other entities who are having forward and backward linkages with the railways and the logistics sector. In fact, if you are tracking us, we have already done a funding to, we are entering into a arrangement to fund NTPC or purchase of their wagons which they use in the railway system for their coal logistics. Similarly, there is everything including even the hotel construction which is linked with the railway tourism which we can fund. Also, yes, we are making a strategy and we are very much plan to go forward in next quarter and the next FY, next FY ahead to look into these prospects. And one more thing, as you know that in railways we do the bulk of lending with a margin of 35 bps and 40 bps. Once we go outside purview, we don't have that restriction. So obviously we'll be doing the lending at a very attractive rate. In fact, better than and competitive than the peers. This is what our motto will be. But still, our margins will be high, and that will show a good growth in my PAT also going forward. And the next culmination, as you mentioned, yes, going forward, the quarter to quarter will unfold with you and share with you. Yes, our aim is also to be as good at funding anything and everything in the infrastructure of the country, like PFC REC. In the coming years, I will say it's not visible in next 2 quarters because the business lying in the ecosystem backward forward to railways itself is sufficient right now. But with growing muscles and things going forward, yes, that is the destination for this company also.
And sir, as far as the pricing is concerned, we see that REC, PFC cost of funds are around 7.2. Ours is around, and they land at around 9.5, so they make about 2.3, 2.5. We have been operating at a very thin spread. If we continue to do so for the other infra, is there a possibility to gain the market share from the other NBFCs dealing in infra segment or any thoughts there?
So Sanjay, your question has got an answer. The moment we foray outside railways, in railways, yes, it is zero NPA business. It is a assured business. And we have an arrangement of funding them at 40 bps and 35 bps per project. Once we go out, obviously the lucrative market, as you rightly mentioned, the kind of bps, which I'm not saying, you are saying me that it's 300 bps or 250 bps. So those lucrative aspects are there for us also to grasp. Yes, as our ethos has been, since our rated cost of capital has been lowest in the market, if we foray out, as and when, and which we are going to be very soon, it's not that we are going to crash the market of lending, but yes, we will surely be the most attractive lenders in the ecosystem. That is going without saying. And for surety, we are going to move out to the railways, apart from the railways funding, to the other sectors from next quarter onwards. So that is on the card.
Okay. And sir, the other question was that one is that what kind of a growth CAGR we should expect over next 2 years, 3 years, 5 years that you would have under the plan, and particularly outside the railway related financing, which has been a zero NPA business for us. Whatever other things that we do, how do you see the share of that piece moving in, say, 3 years or 5 years? So will it be, say, 10% of the AUM in 3 years, 15%, 20%? How do you see that?
So Sanket, I won't be putting in numbers on that, but as you see, what we are working straight away, one, that a steady pipeline should come from the railways. That we are already in discussions, and once the things unfold, as you know, railways declares this right in the beginning of the FY. And the beauty of the railway is that the whole disbursement takes place in the same FY. In comparison to other companies where sanction projects are not mandatorily disbursed in the same year. It may get disbursed in a couple of years, 3 years. In our case, once the railway declares in the budget that this much of funding will be taken from IRFC, it is disbursed in the same year. So that is one stream. Second stream, we are not putting in numbers, but as you see, once we grow and go out in the market and start taking anything in the logistic field and the infra field, obviously we are going to grow, and since my numbers outside railway is zero, my CAGR for those fields will be high. A. B. Whatever margins will come from that business, as you've already seen that my peers are doing at 250 bits and 300 bits also in some cases. We'll look at the quality of the assets, and obviously our growth will be quite phenomenal. If you want to let me know in next 2 to 3 years, that is the plan in the hand. I will refrain from putting in numbers on that, but every quarter when we meet you, the numbers will keep unfolding for you.
Sure, sir. Sure.
Thank you very much. The next question is from the line of Kamal Mulchandani from Investec Capital Services. Please go ahead.
Hello, sir. Thank you for the opportunity. I just wanted to ask, like, what is the disbursement target which we are planning for the current year and the next year? Apologies if I might have missed the answer to this question like earlier.
So right now we are not giving any targets. As I mentioned to you, for the last 6 quarters, I mean last full FY and this FY for the first 2 quarters, there has been no new disbursement. Of course, because of the moratorium that we have given on the project side, we are adding them every year in tune of around 25,000 crore. That will keep coming. Apart from that, after I've taken over last month, we are working very actively with MOR and MOF also, Mr. Finance also, A, to start our steady business from the railway side, and B, we have already funded to NTPC, and we intend to start looking at the prospects in other sectors also. So I will not be giving numbers, but going forward, I can assure you that our disbursement as well as the project sanction will pick up steadily.
So just wanted to like understand that we are foraying into other infrastructure sectors apart from railways. So what is there some guideline from the ministry or something that they won't be needing any funding from IRFC going forward?
Let's be very clear. Let's be very clear. As I mentioned to you, the funding to the MOR, which is our mainstay and which is the main mandate, that should keep continuing. What size of the funding will be there, that they announce every time in the budget. Okay?
Correct.
So the 1st February when the budget will come out, we will give a full clarity for next FY. A. B. For this FY also, as if you understand the government budgeting system, there is something called revised estimate. And this revised estimate comes in the month of January, right, for this current FY. There may be a chance that if they feel like giving us something that can come up, there's no guarantee of that, but if something comes, the same will be disbursed in Q4 only. This is the beauty of the business that we get from the railway. It's not like sanctioning and disbursement will take in 3, 4, 5 quarters. Whatever, if at all something comes from the GOI and MOR for us to be disbursed, that surely will be disbursed in this FY only. So it all depends how it unfolds, and I think the story will be unfolding in January and February so far as government business is concerned. I hope I have made it clear.
Okay. Thank you so much, sir. Just wanted to ask, like, what is the contract size of the deal which we have done with NTPC?
That is 700 crores. This is just the beginning because this is the first time they have gone a leasing model with us. As you know, we don't do the funding in that loan kind of thing. It is the same model that we do for the railways. It will be a leasing model for 15 years. And the first tranche of 30 rakes they have entered with us, and this is a very lucrative business we are looking forward to, coming from NTPC and all petroleum companies who are main customers of Indian Railways. So they are now thinking of owning the rolling stock on their own rather than depending upon the railway. So this will be a very lucrative business going forward if you get a good pie of it, because we are the only company who are in the leasing business of the rakes. And margins will obviously be better than what we are getting from the railways. So that's one of the brighter sides that we are looking forward to, and we'll try to monetize it and grab it as quickly as possible.
Okay. So will there be any change in the tax rate because of this, or like it will continue to be zero?
So let's hear from my Director Finance on this.
See, currently we have opted for, as you know, Section 115BA, and because of this depreciation on the leased assets, we are not paying any tax. So this NTPC business is also on the leasing model, so we'll continue to get depreciation. And because of the accumulated depreciation for my funding to MR also, for the next couple of years, we don't see any tax payment.
Okay. And but we'll account for some credit cost for this to some extent, like that would be there.
Yes, whatever is a borrowing that will be cost, but because of the accumulated depreciation and further depreciation on the finance, whatever finance lease we do subsequently, we'll get depreciation on that also. So we don't see any tax payments coming for the next couple of years.
Minimum.
Yes.
Okay. No, just wanted to confirm on that point as well, that since this is some financing to other than railways, we'll be booking provision for credit cost that we'll account for, right? Provision for towards NPA or something like that.
Explain what kind of a provision you are talking about?
Again, loan losses. Yeah, correct.
We are currently doing 0.4% for whatever funding we have done for the same provisioning we'll do for this exposure also.
Okay.
So that doesn't have much of impact, as you see in the RVNL we have done.
Yeah,
so it is forward backward. So it is coming back again and again.
Okay, got it. Thank you so much.
Thank you very much. The next question is from the line of Naman Kumar. Please go ahead.
Hello, am I audible?
Yes. Please go ahead.
Yeah. Hello, sir. Thank you for giving me this opportunity. The first question is with regard to project assets. I understand 5-year is moratorium period, but after that, once the lease gets signed, how much is the primary, what is the duration of primary lease period? Is it same as rolling stock, which is 15 years, or is it more than that?
So let us hear from my CFO.
We will follow the same method as we are following in the case of a rolling stock. The primary lease period would be 15 years, and in case of a project asset, secondary lease period will get reduced from 15 to 10 years.
Okay, got it.
And 30 years remains the same. 30 years remains the same. A 5-year moratorium takes out of the second life of 15 years. So 15 years remains the same, and then the next 15 years reduced to 10 years.
Okay, got it. Thank you. And my second question is, with respect to no targets being given to IRFC, I know we have discussed a bit on this with prior questions as well, but if you can give some clarity, like why is the case? Because historically I've gone through previous year's annual report like 10, 15, 20 years. I have never seen that Ministry of Railways has not given any target to IRFC. So there must be something which is happening to which might be you guys be privy to. So if you can let us know, that will be very helpful for the investors to understand what is going on. Because I read one CAG report wherein they raised a question, or they raised an issue of, because Ministry of Railways is paying substantial chunk of its collection to IRFC in the form of principal payment and interest payment on leases. So if you guys have any privy to what is the rationale for the last 6 quarters or for the last 2 years, and Ministry of Railways has not given any funding to IRFC, that will be very helpful.
So Naman, most of the things are in public domain only, so nothing which is being hidden from any of the shareholders of the company. So let's hear in a proper manner. So, as I mentioned in my opening remarks also, if you look at the disbursement from FY28 to FY23, that was steep and abnormally high disbursement that IRFC did to the railways. The average was 60,000 crores. If you listen to my opening remarks, FY21 was as high as 1 lakh crore plus in 1 year. So there is something called debt equity ratio that RBI also maintains for every company, and in those days my net worth was nearly 50,000 or 39,000 crore. So this debt equity ratio went more than nearly 10%, which is quite high in terms of RBI's guidelines also. So there were two things. One, that all of a sudden in 5 years, if you are watching my balance sheet for 30 years, you look at my assets in last 25 years and the asset in last 5 years. That will give you the real picture. So the rise of the balance sheet and asset under management was so high in 5 years that it was little difficult to not to take a pause and put the things into right perspective, let the debt equity ratio also cool down and have a new strategy. So this is primary reason of that. Nowhere it is opined by Government of India that henceforth no disbursement will be done by IRFC. This is the prime reason that we foresee as a company on behalf of the Government of India. Now, there was some management vacancies also in IRFC. Now that I have been put in the place and now I have full board with me, we are already in constant discussion with MOR as well as MOF. And since nothing has come out in clarity, so I'm not putting in numbers, but as I mentioned in the last question, that something should come out with clarity in the month of January for RE, that is this FY, and in the month of February for next FY, because government is very clear if there is anything allocated to IRFC, that comes in the part of budget only. So there is no ambiguity so far as that is concerned. So this is part A. Part B, after listing and with the size of balance sheet, which is nearly 5 lakh crore, it is incumbent upon this company now to diversify. There is no requirement now just to be dependent upon the MOR funding only. So balance sheet strength and my network strength gives me a lot of leg room to start looking at the quality assets in all the infrastructure. As you know, national infrastructure pipeline forecasts huge capital investment coming in various sectors of the country for next decade. We want to be part of that, and we need to enjoy that pie also in a manner that we also get good numbers on our bottom line for our shareholders. At the same time, we position ourselves as a NBFC who is lending to all the people who are in the growth story at a very competitive rate. We have got excellent reputation in ECB market. We are the ones in the country who gets the ECB lending at the cheapest rate. We are the only company who has come out with a 30-year tenor bond in the market. We are the first company who got their bond listed in GIFT City. So these strengths we want to leverage not only for railways, going forward for all the sectors. And if you heard other questions, beauty for me is that if I do a railway business, I'm getting 40 bits. And if I do a business outside the railways, as somebody mentioned, Naman mentioned, or somebody mentioned that the ambit is as high as 300 bits. So if I do those businesses even in smaller numbers than what I'm doing for the railways, my PAT is going to be very, very sound and steep. So next 2-3 years, that roadmap and plan we are making, and everything will be unfolding, as I said, every quarter onwards. Maybe January, when we're meeting with Q3 results, maybe I'll be coming out with numbers also, what MOR is giving us and what MOR is planning to give us. But right now, this is a projection I can share with you. I hope I have clarified.
Yeah. This was really, really helpful. If I can squeeze in one more question, it's more fundamental question regarding the interest cost. So suppose when we lease a rolling stock, just a conceptual question it is. Suppose we lease a rolling stock of 100 crores. And that time, that particular year, my borrowing rate for the year was 7%. So I will lease it to MOR for 7.4%, right? Now what happens?
You're right. This is the WACC plus, but at the same time, we have to understand our business model. It's not only price, our risks are also passed on. If there is any support, if that borrowing I have done, say from a floating rate, then interest rate variation is passed on. If that borrowing I have done from ECB, then currency variation is passed on. So it's a cost plus model. So cost plus some of the risks are also passed on. But you're right, if it is positive 7, then 7.4. At 7.4, I'll be calculating my lease rental.
Okay. So now lease is for...
You understand the philosophy, and for all shareholders, you understand the philosophy of my lower bits margin with the railways.
I understand.
Insulated with any kind of market fluctuation.
I understand. My question is more from, suppose that lease 7.4% is fixed for 15 years. Now that 100 crore borrowing which I did, I may have done that not for 15 period only. Some borrowings may be for 10 years, some borrowings may be for 5 years, and some borrowings may be for 15 years. So what happens after 5 years, 20 crore was borrowed for 7%, but after 5 years, I have to re-borrow because that that borrowing I have to pay. So 20 crore I now borrow at 6%. So that 1% extra benefit which is arising, accruing, does that also get passed to Ministry of Railways, or does that belong to IRFC?
So if it is done from the fixed rate, supposing it's done from, I fund it from 10-year bond, then that benefit comes to us. But at the same time, you have to understand there is a capital recovery also. So I'm also getting some capital recovery. So that also goes into the repayment of the debt which I have borrowed for funding of that particular asset.
Okay, yeah. Okay, got it. This is helpful. That's all from me. Thank you.
Thank you very much. The next question is from the line of Umang Shah from Kotak Mutual Fund. Please go ahead.
Hi. Good morning, and thanks for taking my question. Sir, I just have a couple of them. One is, from what I understand from the discussion so far, it appears that should we understand that capital is a constraint to growth, and probably then in that case, why not probably raise more equity and bring our gearing ratios down, and probably look at growth? Is that an option for us?
No. I think let's clarify to you. That I said that since we were going so far, so we as a company thought that let it cool down rather than infusing more equity. I mean that is not the constraint at all. In fact, to tell you the fact, our board has already approved ourselves 8 lakh crores of. You can let's hear from DA.
Now my current debt equity is leveraging is 7.83. So there is absolutely no constraint for further growth, and plus I'll be adding, and my capital this CRAR, as you know, since my exposure is 99%, more than 99% exposure to MR, my capital adequacy is more than 700%. So there is absolutely no constraint with respect to equity for the growth. And further, every year I'm adding to my net worth, which will give me further headroom for the growth. So as far as the capital requirement, there is absolutely no need for any capital infusion for growth. So we are very comfortable days.
So Umang, what to add to you, it is more than the equity, if you understand. You see, for the railway assets, we don't have to do a lot of appraisal. So it's all safe, coming from the government, almost sovereign. So we never had a very big appraisal team with us. That was not required at all. So my strength lies in bringing in the cheapest fund. So my resource mobilization team is very, very renowned, and they are very good at bringing the money. Now that we are trying to foray into the lucrative business outside railways, our focus now lies on building up our business development team and appraisal team. In fact, in the railways, I have the expertise of 5 years in appraisal itself, working at finance side of PPP and EBR. We did with General Electricals and Alstom for Madhepura and Marwa factories. So those expertise are brought in, and we are now already in the process of creating a very robust appraisal team, taking all the talent from the market in our team. And this appraisal team, once it is in place, it already is a work in progress in a very fast manner. We will be looking at the lucrative projects outside railways, and this remains our mainstay. The only thing that you mentioned that let there be a clarification by January and February about this FY or next FY, what ticket size we are getting for the government. So as far as equity is concerned, there is no concern at all. And in fact, in a couple of years, we have added more muscle to our network. Now it is more than 50,000 crores. So there is no issue on that count. I hope I have clarified.
Yeah, sure. This is quite helpful, sir. In fact, my second question you have sort of partly answered, which was in terms of building capabilities as we try to kind of look at funding projects outside the railway infrastructure ecosystem. Sir, yeah, are there any specific areas of infrastructure which you have already identified? And the second part of the question was regarding the private sector exposure, right? I mean, so far, as you rightly said, we have been operating in an environment where the exposures have been almost sovereign, right? Zero risk. However, if we just go back in history and if you look at some of the other state-owned NBFCs and their experiences along with private sector infrastructure companies, clearly that has been a bit more patchy, right? So how should we look at it in terms of strategy, in terms of our ability to underwrite and our intent to underwrite private sector exposures?
So on the lighter vein, this company has brought me here CMD, and I always claim that with my government experience of 30 years and delivering at a fast pace within the ring fence of 3 C's, that is CBI, CVC and CAG, we have developed the expertise of doing the right kind of appraisal and not being rash in getting any kind of business. So that is expertise that I have brought, and this is something I'll inculcate in my team down below. Having said that, there is no strict no to anything. Every business has to be evaluated in its proper manner. We'll be looking at as I've been telling in all my question answers, that we'll be looking for the quality of assets. We are a zero debt company, and we would like to maintain that kind of good thing that we have with us, that we remain that. So obviously, going ahead, even in the sectors outside railways, we will be very, very handsome. I'm not saying strict. Strict is not a good word. We'll be very, very handsome and prudent in analyzing the kind of quality of asset that is being offered to us. We'll be very attractive in offering a rate to asset which is very good in ratings. For the fact that, for me, I'm used to offer railways at 40 bits. So just I'm giving you a flavor. I'm not giving you the numbers that this is the number I'm going to give. So please don't quote me as the kind of numbers I'm giving you. But say, in comparison to 40 bits, even 150 bits, even 120 bits, sounds very nice. So we are preparing ourselves for that, and our motto will remain that we will look for the very good quality of asset, and I assure you that IRFC will be having one of the best appraisal teams available, with a mix of government people who have done appraisal as well as people from the industry who are very experienced in doing the appraisal. Right? From the CPSCs, we are open to take people from the private also. Once this appraisal team, which is already in progress of getting formed, we already have a team and we want to strengthen this team. We'll be looking at all kind of business available. You mentioned in terms of private thing, my mandate doesn't stop me from giving it to anybody. But having said that, we remain in the similar manner. As I said, we don't want to play 20-20 match. We are a very responsible company and we are very much answerable to our shareholders. We will be playing a test match kind of very disciplined, knowledgeable and good business kind of thing that we'll do. And those things and those numbers will unfold quarter after quarter in our business because we need to walk our talk. And this is the concall is started. Every quarter you see that the growth is there, and there is also an assurance that we won't be landing in an asset which is going to be backed. This is the motto that we will take forward in doing the business in the coming quarters and the years together. Right.
Perfect. Thank you, sir. That answers my question. And just the last one, which is sort of related to the first question which I asked. Sir, we have now IRFC is now listed for quite some time. And is there any timeline which the board has decided or discussed with SEBI as far as the minimum public shareholding is concerned? So is there any dilution which can happen round the corner to bring down the promoter shareholding to below 75%?
So, Umang, that's a very genuine question, but as the same business company, I won't be answering this. This question goes to my promoters. So, better throw this question to Deepam Secretary. I'm sure they are doing something, but it is for them to answer this question. But as you know, SEBI guidelines are sacrosanct for everybody. We are not out of that purview. So whatever SEBI guidelines are there, that is applied on everybody. And our job as a manager of the company is to see to it that we are doing good business, we are doing a solid business, and we are doing a risk-free business. So this management is committed to that. So far as diluting the shares are concerned, statutory limitations are there, and this particular question will be answered by Deepam Secretary and not me.
Understood. Perfect. Thank you so much for patiently answering my question, sir. Thank you.
Thank you, Umang. Thank you.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Sanket Chheda from DAM Capital Advisors Limited. Please go ahead.
Yeah, hi, sir. So the answers have been elaborate. Just on one thing that you didn't allude to is specifying maybe your growth intentions or putting a number to it. But just some sense would there be useful. Maybe we will look at least growing by say 20%, 25% RAUM, maybe 20%, 18 to 20% would also be quite a meaningful number on our base. And of that, say how much could be the new infra piece or the other lending besides railways.
So, Sanket, we won't be putting any numbers. As I clarified to you, that's not the intent of the management. Management can give you the flavor what kind of business is coming on the platter. That I think I have discussed in a very elaborate manner about the government business as well as the private business. I have done detailed talking on that. Numbers we will surely not put, but as I mentioned to you that so far as the numbers coming from the government, those numbers cannot be kept secret. Those numbers will be coming in the month of January and of course in the month of February when we take the budget on 1st of February. So I think if you are so keen about numbers, let us have patience. It's not far off. It's approaching soon. That's part A business. Part B business, as you know, any kind of arrangement, MOU or the business we are getting from the other side, immediately it goes to the both of the exchanges and every shareholder is aware of that. Like NTPC, the moment we did it, the very same day we posted it on exchanges. So let's follow our trackers on the exchanges. Anything coming on those sectors outside the government parlance will be surely and on timely will be posted on the exchanges. Numbers I'll refrain from quoting as we do in the government parlance.
Perfect, sir. Yes.
Thank you very much. Participants, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Thank you and over to you.
So, thank you, Sanket, and thank you, Dan, for making this good beginning with us for the new board. I'm sure going forward we'll be bringing new insights and new facts and figures for our shareholders through you. And I thank you all, and let's wish that we meet on a very high note and a positive note for the next quarter. Thank you.
Thank you.
Thank you.
On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.